common principle, which I think is why most people don't follow it, Vinny.
Yeah.
That's that's why today just has to happen. Welcome back, Alchemist. This is Abundance Thursdays with myself, Walter Emerald, and the great Vinny Smile Chopra. Vinny, welcome back. I heard it's 44 degrees where you are. Well, it's 11 degrees where we are. So, Vinny, I see you're indoors, man. 80-20. What does it mean? Why did Pareto say it was such a good idea? And how do we use it in real estate? Before we dive in, what is going on the West Coast, the
You know,
best coast?
West Coast, actually, we are heading out to Cabo San Lucas to attend a wedding of my partner. People, my partners are younger than I am, 73, I'll be 74, but my partners are 33, 34, 37.
You're
For
smart, Vinny, because you're the capital stack. You're the capital guy, and they're still putting out the work. So they have to be a little bit on the younger side. This game is a young man's game or a
and
young
keep
woman's
me
game.
young. Keep me young. I mean, it's the circle of friends. When you go into the same age as you, and you feel and they're thinking and everything.
Let's be
What
real.
they
You're going to be 47, not 74.
exactly.
47 years young. You're getting
Yes.
wiser by 10 decades every year now.
every time. But 80-20 principle is so important. Everybody to look at their activities for last week. And that's what I was thinking, to say circle, the main activities that got them results, got them investors or people or brokers, in our case, and how many deals we talked about, how many underwritings we did, how many LOIs did we put, things like that, to see the results with the activity. A lot of times, 80% of the results come from 20% of the very selected activities.
Wow.
That's
Yeah. I gotta say, Vinny, I feel disconnected from a lot of the real estate investors out there right now because I'm so focused on leasing up and everybody else is trying to find deals or trying to find money. And I'm just like, is there normal people out there who want to live in my buildings? That seems to be like we're all the thing we're tracking and the metrics we're following, which we are doing good, by the way.
Guess
We've
what? See, your results are coming 80% from your focus of 20% of leasing up. So that's what Stephen Covey, I remember, in his eighth habit, he talked about his daughter was pregnant and she was really uncertain. I remember reading that, that what to do, the compass or the calendar. So it was the choice between true north compass, what she should be doing, or taking care of the calendar with appointments and everything. And Stephen Covey said to his daughter, just follow the north. So don't worry about calendar when you need to be focused in one direction with getting the baby in this world. Similarly, it's true for us. We got to be concentrating on different activities to get results. I mean, if the activities don't get us results, we don't need to do it.
This is so cool. All right, because I got a baby coming, so I know what that means. You're like, yeah, just that has to happen. And we've got this lease up strategy we're pushing hard, but also we're about to go into a cap raise. We're ready to go and start for a capital project. I
Yes.
feel like I'm following in your footsteps. I see you buying the hotels. You got, I think, 6 on the agenda for this year, not all locked down, but coming. That's
Yep.
a goal,
Yeah.
or 7. And now that we're getting to the point of, okay, we're stabilizing, before I went to cap raise, I had to make sure we were more efficient with the capital.
Yeah.
It was on my heart. It was in the finances. I could see it. And the last 9 days, I did that. In the last 9 days, I could see the trajectory of everything changing. And now I'm saying, good, let's go do it again. Let's do more.
Yes.
So Vinny, 80-20, does it work in lease up? Does it work in cap raising? Does it work in finding deals? And if so, what is your 20%? Where do you find yourself going?
Oh my gosh. Oh my gosh. I'm so glad you're saying that. We are concentrating. See, 80-20 can be in finding the right hotels, in my case, partnering with right partners, and raising money. So both two prongs have to be the whole focus of my activities. have to be those two places only. See, we get stymied when we are thinking about several things. I want to do 5 things. I want to do 10 things. But guess what? Only 2 or 3 will bring the results. So it's 70-30 or 80-20 most of the time. And that's the reason most everything, that's what Pareto principle says, is that what your activities are, they better bring results. Okay. So if those activities are just killing time and feeling sorry about not getting results, and not really preparation time is a good time.
Yeah.
Client talking one-on-one, great time. Presentations, great time. But having the assistant.
What would you say, Vinny? What would you say is better? One-on-one with one person who's ready to put $100,000 in your pockets, or group sessions with 10 investors or 100 investors who want to put 100,000 in your pocket? Which one does Vinny say is more important? If you only could choose one.
I would say overall, getting 100 people to buy into who you are and then individually meeting with them. See, 100,000 is a big payoff. If you raise 100,000, we might make 30,000, right? Over the years, right? So it's a 30% commission, let's say. So what I find is that even 3 people, if we are in a meeting and one gets negative, guess what? 2 are gone. So
Right.
individual, and everybody individually has their own profile, their risk tolerance, their background, and what they're looking for. So it's good to do one-on-one. That's how I built my companies, is one-on-one. Most of the time, I've never done big webinars. Now I do it just to teach people in Eventbrite and everything. But then from there, we get accredited investors. Then we meet, or I meet actually. My assistants couldn't do it. We tried it and tried it and tried it. They said, no, 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 we want to meet with Vinney. We want to talk to him. We want to get it from the horse's mouth, which is fine. So, and it's very important that we find, as CEO or whatever, find time to meet with the end investor. They are giving you 100, 250, 500 million, 2 million in my case now. Why would they give it? Because they need to know what kind of underwritings I've done. They have so many questions and I need to find answers. I video recorded few things, sent it to them later on. I asked them to see the PPM, the whole thing with their attorney, give it to them, CPA, their pastor, their church, their priest. I mean, and the family who is very, very shrewd, they need to look at my proposal or the OM and then decide.
Oh, this is good. Let's go deeper. So 80-20 has an 80-20. So there's an 80-20 to the 80-20. So like 20% of 20 is 4, and 20% of 4 is like a fraction of 1.
Yeah,
It's
right,
less than
right.
1.
Yes.
So if you were to say that meeting the person is important, you got to go one-on-one, but then doing it again and again, the third or fourth one-on-one that you're doing with them is almost non-negotiable. It's more important than the first one.
It is true, because the thing is, many people just stop at the first one and then they don't really dig into each person's, what they are looking for. We got to make sure that their tolerance for, in my case, right, I'm changing
Because you're
from,
talking about $1-2 million investments. Like this is big money that people are
big
putting
money,
in. Yeah.
huge money, huge
Even
money.
for very wealthy people, this is still big money.
Totally it is. I mean, even $1 more is a big money, right? 100, 250. Now my level is 250 now. So 250 minimum, then 500, then million.
250 is your minimum. It's the minimum
Minimum.
that a person can invest with you. Yep.
Yeah, right now in the
Okay.
hotel. Like I'm raising 3 million with only 6 people or 5 people now, and that's beauty, because they are very wealthy people and they need those special K1s, tax breaks and things like that in hospitality. If we structure it right through your CPA or your attorney, I'm not one, we could actually give them a general partnership loss for the cost segregation and the bonus depreciation, which they can bat against the W-2 income or capital gains and everything. So it's
Right.
very exciting. Yeah.
It's fascinating because I got some investors who want to sell out of some of their stocks because they've gone too up. They think the stock market's going to come down a little bit on those particular stocks, not the whole stock market. They just think
Yeah.
that stock's a little overpriced, but they don't
Today,
want to sell because
the
the gain's
bloodbath,
way too big.
bloodbath today. I don't know if you saw it. It
Well,
was
this is
down
the bloodbath they were expecting. So
today, 700 points. Even Nasdaq went 400 points down, which is huge, huge, huge.
yeah,
Yeah.
this is so a lot of my friends have been getting out of the stock market and shifting over, but they've been using the gains of their real estate professional status in order to protect themselves. Their wives are real estate professionals or the husbands are real estate professionals,
Right.
and that's been a way for them to mitigate and be able to get out of those really dangerous positions they were in, right? They were concerned about this.
Yes.
It's an option. So 80/20 in your time, Vinny, in your time, like you're working out, and I see you work out every week. I can vouch. If anybody asks me, like, does Vinny Chopra work out? I know at least one day a week he's working out, and it's Sunday. It's on Thursday with us,
No, no, no.
and then
I know that
Saturday,
when I meet
Saturday
you
on the 52 Weeks
morning.
of Wealth, I can vouch for that too.
And Thursday, I'm walking or doing no every day. See, you got to keep your mind right. And that starts with Miracle Morning for me, 5 o'clock or so in the morning, quarter to five. And then do chanting, yoga, listening to my religious, things. I'm Hindu and all that. Then the next thing comes, you got to get your body acclimated with exercises, weightlifting, doing the lunges, all the
Oh
stuff, right?
yeah, I love all those.
Yeah. Then after that comes my bicycling, and then comes today it's 9 o'clock. Usually I do elliptical earlier, but because we have the show, so I just planned it that way. So you have the opportunity to plan your schedule in the morning to align yourself for victory for victory. See, that's the thing. So, miracle morning along with exercising. And I want to be like this when I'm 84, brother. That's what my goal is. My
94, Vinny.
10.
Let's go. 104.
So,
You
all
know,
the come together by discipline. That's what I would like to say. I get 80% of the result such a short period of time in the morning. That's why my mind says subconscious and conscious, we need do it, do it. It's not a chore for me anymore, right? Because I've disciplined myself to say, you know what, for my healthy living and travels and spending time with the family and enjoyment, in this world of, wherever we got left, the key thing is to really concentrate on the time usage. 80/20 in the time usage is the best thing. What's the most important thing I should be doing right now? Alan Lankin's book, How to Control Time and Control Your Life, changed my life, to be truthful. 30 years back, I picked it up. But the key thing is, what's the right thing I should be doing this moment?
this goes not into just health. It goes into your mindset. It goes
Yeah.
into your finances. I was looking at somebody who said that gold and silver are really, really high right now, which means that basically America doesn't believe in the currency, or the world doesn't believe in currency at the moment,
Yeah.
because it's not just America that buys gold and silver. It's the world that drives up those prices.
Yes.
So what that means is if currency is no longer believed in, typically that is followed by a time where currency becomes the best thing to be holding. So we're right now in a time where people are saying hold assets
Yeah.
because obviously the currency just keeps deflating and things cost more and more and more. But that means a time of deals is coming. A time of purchasing is coming. If you were to 80/20 what's worked for you over the last decade or 2 decades during times like this, what is Vinny Chopra doing right now to prepare himself to really move in a big, meaningful way in
You
2026?
know, it's amazing what we are going to see this year, 2026. Interest rates are going to stay the same. We found out yesterday. And the big thing is those people, those multifamilies, which they were hoping it will ease up their terms and expirations and everything, they will have to inject money into it to stay afloat or sell it. So it's a prime opportunity for multifamily, which I've been staying away for 3 years. Now is the time to dig into 10, 15, 20, 50, 70 units, smaller numbers.
I think
Or
A class, Vinny. I'm looking at A class now. I
I
think it's
love
going to be
it.
available.
Totally.
Nope.
A class, A minus class at a B price. You could
At
get
B prices, you got it.
it. You got it. That is the big thing. Grant Cardone, I just happened to watch one of his things. He was at a convention over there in Las Vegas. He says it's pessimistic view. And that's the time you really jump in. That's
Yeah.
what Warren Buffett has done all his life, right?
Yeah. I
Wherever.
think the A class operators are bleeding right now, and they're going to bring their stuff to the market at B class prices. And
Yeah,
we are sitting here submitting the offers as we speak.
I love it. I love it. And that's the key thing. You got to be in the ball game to win. You cannot be spectator all the time. That's what we are doing with hospitality. These are the beautiful assets, but they went bad because of COVID and everything. And they've been on the books of the lenders, banks, and some of the syndication groups too. We are buying from them. The key
It's
thing.
it's many syndication groups at your size, Vinny. That's a lot of what it is. The lenders are taking these things back.
Yeah, they are. They are. So I think that's the key in our circle to keep yourself open. Last night's mastermind, we did so much good stuff last night. I miss you there, brother. But it was fantastic
I
to
was on a plane back from Jackson, Mississippi. I missed you too,
oh,
Vinny.
wow, wow. I can see you. And then some of my students are joining hands at just bought 12 units, then 40 units. They just got it. And this family has so many other multifamily. So they are buying for 1.6 million or something, 40 units. That's 40 a door. And they're going
Yep.
to renovate, and the bank is giving the money for the renovations. I mean, it's mind blowing what's happening. And Pramod, my other student, he bought 78 units over there in Chicago area for zero money down. You know him a little bit.
Yeah, I know Promote and
Yeah.
Chicago is a market that looks like there's opportunity right now.
Bought,
Chicago's one of those markets.
bought it for 3 million. He just told us last night, appraised at 6.6 million.
That's how you do
In
it.
1.5 year, they did the renovation of all the 78 units, and it's just beautiful now. From 3 million, zero money down, right, to 6.6 million appraisal. Kudos.
That's the way it's done. So Vinny, if I were to look at what is happening right now in the hotel space and in the apartment space, people got here because they were not doing the right things, right? So 80/20 works in the wrong things too. So 80% of your problems are caused by 20% of your actions. What is it that you've seen so that people can prevent it? What is it? What is an activity that operators were doing that was detrimental to their success, or
I'm
something they weren't doing that would have benefited their success?
Very good point. Very, very good. Last 3 years have been really bleeding years, in multifamily because the newbies, they underwrote not with strong assumptions, and they didn't foresee the market, of course, but then the interest rates never went down. I mean, that's what they were banking on. They took bridge loans, which expired, or they don't want to refinance, or the rate locks also went up high to buy down the rates, all those things. Insurance went up, property taxes went up, which so underwriting wise, when we did the numbers, I remember 3 4 years back, we walked away from lots of multifamily, but other people were overbidding. We said, how can they make money?
They
So
can't.
that's where they got caught. They got caught in that whole mess by overpaying, and then the expenses didn't go down, rents didn't go up like they projected in their performance and everything. It's a crash right there, you know? So that's what happened.
So
Yeah.
it's the underwriting. It's in the underwriting. But
Yeah.
let's pretend Vinny Chopra got into a deal like this. You know, you got the bridge debt. You've got insurance went up. What would you do on 100-unit building in, let's call it St. Louis, Missouri, right? A hot market that had a lot of the same problems, or Memphis, Tennessee, like one of those markets that just you see a lot of operators failing. You know,
Oh my
it's a
gosh.
challenge, right? What do they do to fix it?
Love to give a case study of my own deal, by the way. From 2021, something came on my desk. It was 107 units. It's a real story in Knoxville, Tennessee. We
Okay.
it's a real story, real story. Very good ending, by the way. Everybody listening to us, don't go away. Because 107 units, we found a, a person who lived in Nashville, was a wholesaler and a flipper, and and it was bought in Knoxville, renovated. 2 years it took to renovate, and they were trying to sell for $12.5 million, right about there. And I said, wow, okay, fully renovated, 107 units in a good location. It's a good, solid market. We did the rent comparisons. They were double the rents. What? The property management company had it at 100% occupancy at lower rents, fully renovated building, everything right. So we bought it 17 offers came, and I think I gave them 12.5 plus maybe 300,000 non-refundable or something like that. Anyway, come to think about it, we knew from the market study the rents will go up, and it took us 1 year. My daughter and us, I give credit to her and our property community manager. They increased the rent. We had to change the whole demographics. We had a business plan in mind, and we did it. But then the interest rate went up too. It was a bridge loan, went from 28,000 payment to 72,000, three times. But because we knew our business plan will work with increasing the rent and demographical shift and charging for not parking, the cable and internet, it was all being given free, water free, everything. It's not all bills paid property. I've done that many, many times. So we got the new leases as they came into new program, and the last end of the stories, we sold it after 2.5 years for 17 million four.
17 million
1.5
for.
to 17 million four, brother. And I locked in the new rate. It was like 9% or so. It had gone up 8 or 9. I got a new loan at 5.56, assumable loan for the
Did you
buyer.
sell that with the loan? You sold the
Yes,
loan with the building with assumed.
yes,
Got
yes,
it. Let me
yes.
ask you a question because this has been coming up inside my own portfolio. I've been telling the team we're getting this level of tenant today, but we're going to convert to a different level of tenant, a different community, which means we
Yes.
have to change some things about the common areas, change some things about our culture. And I'd like for you to break that down. How did you change from this tenant base to this tenant base? What are the active steps that you and Monica went and implemented?
Totally, totally. The biggest thing is you got to see where
This is
the
80/20 in my book. This is where the money is.
location, location, location. So what we find is that when we have 100% occupancy, it means that the rents are very low, and people are coming there because it's all bills paid. That's what it was. So we determined that right away. We also found out that the adjoining nearby mile, 2 miles, 3 miles, what's the rental going on with newly renovated units, which you are doing, by the way, right? You are renovating them.
Yeah.
So the residents would love to flock and come to a newer looking unit. It's their family, they're living with their children, everything, right? So you got to see the differential in the rent. And then as the leases expire, slowly, slowly, you change the new leases will be with the new pricing increase of $100 or $200 or $300. In our case, it was $675. We went to $1,200 in 2 years. So you got to change the demographics. You cannot have mass exodus, is
Right.
called. So we went from 100% occupancy to 94%, always. Nothing less than that. I told
And
our
you did this purely through marketing the new units as people were leaving.
yes,
Like, truly,
exactly.
like purely through marketing.
Through marketing and getting more leads in, good quality residents in, and we gave choice to the ones who were living there too. If they could increase, like for the next month and maybe a couple of months, every $100 or something, we said, this new ownership, we are doing everything in our power. So, we would like to increase the rents, and we were able to do quite well. And we sold it at 98% occupancy at the highest.
And you must have changed some of the amenities. Did you change amenities, or it
You
was
know,
exactly the same way?
you're not going to believe this. When we bought it, it had built, the previous owner had built a whole leasing office and a yoga room and an exercise or thinking room, I remember. So all those were done. See, they had built it, renovated the units, but left, all this cash sitting on the table because that was out of town owner. The property management company in this town was not really doing that aggressive marketing to increase the rents.
Wow.
So
It's a
we just
marketing thing. It
found
comes
a
down to a
soft
marketing
spot.
thing to change the
We just found,
demographics.
yeah, exactly.
80/20, Vinny. It always comes back to selling. It always comes back to the message, the culture, the dreams. All right,
Yeah.
I know we're a little over. So, Vinney Chopra, if somebody wants to learn more about you, they can go to vinneychopra.com/events. So just go to vinneychopra.com. I think the free tools, the free books, how do they get access to that? Just
Free
vinneychopra.com, free
benefits.
resources.
No, actually, it's called vinneychopra.com/free benefits. All my books, my fourth book is coming out. It's almost done on hospitality. I can't tell you how excited I am. And every page in my three books, we didn't do it in the syndication book, but the positivity book, my senior living book, and the hospitality book, at the bottom of every other page, it gives the website vinneychopra.com/free benefits.
That's the way to do it. So this is Abundance Thursdays. We do this on every Thursday at
Now,
9 a.m. PST, 12 p.m. EST. Cheers to your success when
one
you have a
more
choice.
thing,
You got one more.
thing, brother. If I may, I got my clone in all over the globe now. People can talk to me and find my knowledge and listen to whatever they have questions about real estate. I speak in my own voice,
What is the
but in
link to that?
12
I'm going to
different
put it in
languages.
the comments
12
below.
different languages. It's called App.Myclone.IS/Vinney Chopra. That's what, but it is 12 languages, 12 different languages now: Italian, Spanish, German, Chinese, Japanese, Indian. People can talk to me
No.
in their
Vinny,
language.
German Vinny? There's a German Vinny out there?
Yeah, German is there.
9.
There, brother. Please test drive it. Test drive
I'll
it.
have to test
Like
drive. I'll see if the
everybody
Russian version's
test
out there
drive
with
it.
Dorina.
Yeah. I'm
Ladies
very
and gentlemen, you
excited.
seen it here. This is Abundance Thursdays. We're going to come back at you again next Thursday with the next wealth principle. And we'll see you on Saturday at ibuildmillionaires.com. Cheers to your success. We have a choice. Always work with the best. We'll see you next week.
See you next week. Bye-bye.
Love you, Vinny. See you on the